Hello and welcome to Crypto Weeklies. My name is Josh, and we'll be talking about the graph. Before we do that, we'll look at the composite risk score for overall crypto market. This is something we have developed on the website in-house. This takes into consideration top 100 cryptos by market cap and the inherent risk levels based on the volatility, beta, alpha, risk adjusted returns, and percent drawdown to check where we are in terms of a composite risk between 0 and ideally 1, and where the higher score on this y-axis means the market is risky and the lower score means the market is less risky. This is not financial advice. You can read up what are the constituents of or the ingredients of this risk score. The link is in description. It's all connected to this website that we have developed for the community. The URL you are seeing on the screen, cryptoweeklies.com, and it's all free and you don't have to sign up for it. So let's go and get started. We can see that when the risk is below zero point 0.1 the color code is green, and when the risk is above zero point 0.6 the color code is red. You can see that this June 2022, when the price or the when the overall crypto market entered in its least risk, you can correlate that with in terms of its this is trading view in terms of what happened in June, the most bearish month after the bull run, which ended around November 2021. You can see that the base start or the base of the low risk or the lows of the bear market were starting to form in June, and they culminated sometime in November, December over here. And you can see that our risk based composite risk based chart also coincides with the fact that this was a lower risk environment. And similarly, we were in a lower risk environment from August till October of 2023. And you can see, although the prices were higher than December 2022, the in terms of trading view, in terms of our risk profile or the composite risk dashboard, the prices were low, or the risk levels were lower. And this is also typified by the fact that right now the risk level is between zero point 0.3 and 0.35. You can zoom it over here to see today's risk level for the entire asset based on the top 100 cryptos is at around 0.33. And you can see that although, oh, let me get rid of this. Okay, never mind. Although in terms of the overall market cap, you can see it over here as well. The overall market cap is at around 2.65 trillion, and the peak market cap was at around 2.95. Although there is a stark difference between the risk levels from where the previous market cap was at in November of 2021 at around 2.95 trillion to about now 2.65 trillion. You can see that the risk levels right now are in orange color, which is not too high risk, not too low risk. We have left the yellow zone at about late or early February of 2024. Now, since that point, the crypto market did peak to about 0.35 risk at sometime early or mid March of 2024. And now towards the end of March, the risk levels are going back down. So you can use this chart. This is not financial advice to time or to make your own decisions related to when it is a good time to dollar cost average, or when to in and when to dollar cost average out. So typically what happens during the higher risk bands, like we witnessed in May of 2021 and also October November 2021, the market does not stay in this risk band for a longer period of time. It barely goes to high risk and then goes back to lower risk band as price become unsustainable in those in those risk bands. That would be a good time to dollar cost average out. And again, not financial advice. When the risk levels are down over here, that's the better time to dollar cost average in. Right now we are somewhere in between. So just wanted to highlight that in future, when and if the wristband flashes this red color, that could be a signal. And in terms of its sentiment in the wider crypto market, you can this is also developed in house using machine learning bird based model, and trained on crypto specific trainings data set. Some of the narratives are bullish, such as merger of altcoins, and then there are some bearish news related to SBF and the hearing that might play out. Similarly, KuCoin related criminal allegations, whereas uh, some of the crypto related posts. This is last 24 hours worth of activity, and you can hover over each of these bar chart to check out what were some of the relevant news articles over the last 24 hours. And now focus our attention towards the graph and its token GRT. And if you do a control F or command F and find a graph on this website where we are conducting AI based forecast using techniques such as LSTM, ARIMA, and XGBoost. This is what our model has found. The most likely one standard deviation confidence level, bull case and bear case for graph going forward till the end of August of 2024. The actuals are in white. The base case forecasted by the model, again not financial advice, between 41 cents and 66 cents. Right now, as you can see, graph is also one of the trending crypto on this coin market cap platform. Right now the price is slightly under 41 cents. So in terms of bull case for graph is between 48 cents and $4, which is again one almost 2x of the previous all-time high at around $2.20. This is what is forecasted again till September 2024. This is the theoretical ceiling. That means the price action, in order to for the price action to go beyond this level, that would be on only a 10% to 15% chance. The rest bull case, the color code which is color coded in green, is all a theoretical possibility. And similarly, equal and opposite to that, in case of a bearish pullback, the price action could see a 50% decline between 20 cents and 35 cents. That's where we have used our model to forecast GRT's price action in first half of 2024. And now a brief about its tokenomics. The GRT token, in terms of market cap, is at 38th place, and in terms of volume at 69 place. There is no max supply for this particular crypto. The circulating supply is at around 9.5 billion. The total supply is around 10.8 billion. It's a ERC20 token. About it's for querying. The purpose is for querying data for networks like Ethereum and IPFS. Uh, for DeFi and Web3 ecosystem. So this is kind of indexing related crypto. And a brief about its price versus market cap analysis. If we do, we can see that in terms of previous all-time high, we are about only 20% or 8, like in terms of rally, it would take uh, around a 5x from where we are to go and breach its all-time high. In terms of market cap, though, we are almost at the same, almost from 5.7 billion of previous all-time high to about 4 billion right now, almost 1 billion gap. That is almost 25% away from its previous all-time high. But in terms of price, that is February of 2021, and market cap growth happened. If we compare February of 2021, we have exceeded the market cap of February 2021 when it visited its all-time high. You can see that although the market cap has grew by about 2x, the price is nowhere close to its previous all-time high. This means that there has been a lot of inflation over the course of almost 3.2 years. This is not that great if you are not staking or not eligible to gain any rewards from the ecosystem. That means that your tokens are essentially getting diluted. So just wanted to highlight this. If the trend changes, we'll keep you posted of that, uh, the difference between the price and market cap. In terms of its graphs pair with respect to Ether, you can see the trend is clear between March of 2021 of 850 graphs per ETH to about 19,000 graphs per ETH late October 2023. Although since October, when the wider crypto market had its bullish phase, the lower market cap cryptos such as Graph tend to outperform higher market cap cryptos such as ETH. So in terms of forecast, the base case per hour model from the current levels of 8,800, the base case is to about 6,000 level, 6,000 graph tokens per ETH. And if we run with that, and we'll also consider the bull case, which is between 1,300 and 7,600 for graph tokens per ETH. We'll take a median value of around 3,500 and then 6,000. We'll remember this 3,500 and 6,000 and go to our ETH USD forecast between 7,000 and 7,500. And let's take a valuation of ETH at around 7,500, and then do a what if analysis. So what if ETH goes to 7,500 USD and the pair of graph versus ETH breaks down to 6,000, which is our base case forecast. Then graph's USD forecast at that point would be at $1.25. And if let's say this, instead of going to say 6,000, the pair for graph and ETH goes back to this 3,500, which is the bull case. In that case, graph's USD forecast would be somewhere between $2 and $2.20. The assumption is that there is the inflation of graph is at pace with inflation of ETH. So if graph has a higher inflation, then this forecast might go down by 10 to 20%. So this is all of the forecast that we had for you today. The two scenarios in terms of graphs USD, with ETH going to 7,500. Again, not financial advice. The first scenario is at around $1.25. The second scenario is at around $2.20. And in terms of its own USD related forecast of GRT, over here is between in bull case between 40 cents and $4, and in bear case between 20 cents and 35 cents, and at the base case between 41 cents and 63 cents. So all those are all of the forecasts that we had for you today. Hope you like this content. If you did, please subscribe to the channel and also visit the website on your screen, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.